What is going on, guys? My name is Tyler. Welcome back to the channel. We have some huge news to go over from the Dtcc. They are talking about they have a new program to start implementing T+0 settlement time and T+1 settlement time by the beginning of 2022. We're also going to be going over something that is pretty important as well. This whole buy the dip mentality may be starting to fade a little bit. A furthermore suggestion that we are getting close to this market crash or correction, which will ultimately trigger the big shorts like Citadel in AMC to be forced to cover on their short positions. Now let's start off with this Dtcc announcement that we did just get, and this is huge. If you guys are unfamiliar with the situation that happened with retail stocks, specifically with GameStop, the clearinghouses didn't have enough capital to make sure that the other party was going to be able to oblige on their obligation. So essentially, long story short, they didn't have enough money, so they did restrict the sell button on about 10 different stocks. So if you had the stock at $300 like GameStop and they disabled the sell button while everybody else was able to sell out, the big guys were able to cover and get out of their positions, and then the sell button came back at about $100 and really did spook a lot of investors. So that was a huge issue that did happen. That was due because T+2, T+3 settlement time. So they are trying to fix this right now. And this actually did start in May of last year after the GameStop situation. So something that probably should have happened a long time ago. But it says, with 6 months of testing for the proof of concept now complete, Dtcc says it has the quantitative data and qualitative feedback to build out a production-ready workflow and a roadmap for future full industry integration and adoption. The platform is anticipated to be launched in the first quarter of 2022 and will serve as a parallel book and infrastructure for limited bilateral transactions on DLT, with DTC's existing systems continue to remain with authoritative source of transactions. So this is huge. And then they go in to talk about the T+1 or T+0 settlement time, and it specifically says Project Iron has demonstrated that settlement in a T+1 or T+0 environment are effective use cases for DLT, and we look forward to working with our clients in the industry to launch the new platform. So it is looking incredible, guys. And why I say this is such big news is this situation with AMC would have happened again. They wouldn't have had enough money. I mean, Robinhood had to get more money from investors, billions and billions of dollars, to make sure even after these sell buttons were disabled, to make sure they would have enough money, because these stocks had absolutely went crazy and they were not going to be on the hook for all of this capital and all of these failed transactions. So that is, in short, why this is so awesome. You can have real-time settlement. If you buy a share of AMC for $1,000, that money is going to go to the person that you bought the share from, and vice versa. You would get the share in real time. So that is why it's so important. You shouldn't see the sell button getting disabled after this is implemented ever again. And this did start in May, like I said. So we did help change and really help to integrate the Dtcc and other agencies to actually do something about this big problem. So that is something to feel proud of right there. But that is all the information we do know about this situation, and that is huge. I can't wait to get more details around this. But the other situation that I do want to go over is this article that I did stumble across today that does suggest the markets are getting even more choppy and really prone for this crash or correction. So retail traders aren't buying the dip like usual. It says the maximum buy the dip has been commonplace in retail investing, and retail investors demonstrated their commitment to this idea during the pandemic, but for the first time in a while, retail investors might be ignoring that guidance now. The S&P 500 index dropped over 30% in March 2020. Ordinary investors didn't flinch. Instead, they bought up index funds on the cheap. In many cases, this activity has worked as a counterweight to the market's plunges. A note from Vonda Research, a finance analytics firm, describes how that's been true for 2021 as well, except for the most recent hiccup in the markets. In quotes, retail investors have bought every minor dip in equities this year, shielding the S&P against a double-digit sell-off. Analyst Ben, I don't know why their names are always so complicated to say, and I can never say them, but these people, usually the activity has been in the S&P 500 index fund and ETFs like QQQ, they added. On Yahoo Finance Live this week, BMO senior investment strategist John Adams pointed out that the buy the dip strategy has been a very good strategy over the last few years. But while there was a small uptick in inflows in the types of ETFs usually seen in dip buying this week, the magnitude has been a little underwhelming relative to previous sell-offs, Fanda analyst wrote. In similar size drops in the market in July and August, retail investors bought anywhere between 25 and 100% more than they did between September 10th and September 14th. So there's a couple explanations for this. Some people may be running out of money. I think that is the least likely situation. I don't think people are running out of money to buy the dip. I think, back in May, that was when I was running out of money to buy the dip. I was throwing everything I had into the markets, hundreds of dollars every single day, thousands sometimes, and I was even running out of money. And then we did ultimately, obviously, finally bounce from that. But I don't think there's anything really to suggest that people are running out of money to buy the markets. Maybe it's because the extra money from the government has stopped coming in. That could be part of it. Honestly, that was a great way to spend that extra money. If you did get it, throw it into the markets. But anyways, I don't think that is a logical explanation. I think a logical explanation is what I've been seeing floating around in the marketplace in my real life as well, or in my personal life, is people getting ready for a dip, a major dip to becoming a correction or a crash. I think that is much more logical, that a lot of people would truly just like to wait to get better deals on stocks. It doesn't take a genius or a mathematician to know that stocks are overvalued and due for a pullback. If you just literally go to CNBC, go to the S&P 500, you don't have to know jack shit about stocks to know that we are due for some level of correction, more than we have seen following this 50-day moving average, which is basically right here on all of these drops. That's the 50-day moving average. If you guys can imagine that, ever since November, we have not had a 5% correction. That's not even a correction, but a 5% drop in the S&P 500. So people are really waiting for a big drop. And if I were to imagine, that would put us 10% drop is very likely, in my opinion, putting us at about 3,900 on the S&P 500. It is only, time will tell when that is going to happen, if people will come back in and buy the dips, but I think they will. I think they're just waiting out for this scenario to actually manifest and to play out. So that is really what I wanted to go over in this video. That is just another confirmation that we may be getting close to a stock market crash or correction, in my opinion. I don't think people are running out of money to buy stocks in the stock market. I think that kind of sounds ridiculous. And that is also the situation with the Dtcc, and that is a huge announcement. So very exciting information. Drop that like on the video if you like the video, want to help this spread this out to as many people as possible, as well as consider subscribing to the channel for more videos like this. Also, if you guys do want to donate to the GoFundMe, this is my ex. We had recently started talking. She got into a car accident. There was no drinking and driving involved, none of that. Some people actually thought I was like making this up. It's only a $1,500 goal. Why would I even make that up? I don't even really need to explain myself, but I just want people to know that is not what we're about on this channel. If we can help people, that is exactly what we are going to do. And if you guys want to do that or just say a prayer, link is in the pinned comment. Also in the description, there are links for totally free stock. If you guys want to personally support this channel, then check that out as well. Also a link for the buy and sell alerts. You guys will be notified in real time every time a trade is bought or sold, whether it's a day trade, swing trade, or long-term investment with stock, options, and crypto. And we've been killing it over there, so check that out. We keep it very inexpensive, so anybody is able to join, and there is not a financial burden if you are somebody who wants to join and grow their knowledge with passive income, with aggressive growth, with all these different strategies. So definitely check it out, and that is going to do it for this video. So I will see you guys in the next one.